right? But you look at the people that put money into the stock market and how many millionaires that creates.
Yeah.
And you look at real estate and how many millionaires that creates. I mean, so many millionaires have been created, I believe, from whether they're watching our show, Bigger Pockets, whatever. There are a lot of millionaires being created through real estate.
Yeah.
Right. But the only people becoming wealthy on the stock market all live around Wall Street.
That's right.
Right.
Yeah, they're making money off of people putting money in the markets.
Yeah, off commissions.
Yeah.
Right. So you want to talk on that, like why, for someone, maybe this for snippets later on, like why real estate versus the stock market?
Yeah, it's because I was all stock market. I was actually against real estate in the beginning, right?
Yeah.
Why? Because
you were the guy I would call. It's like, hey, you have anyone that'd be interested in diversifying real estate? It's like, no, we're not doing real estate. Like,
yeah, real estate's fine, but this is where you should be putting your money, right? And I was guilty of that. I mean, that's just because that's the way you're trained. You're literally trained to be a salesperson, right? Those licenses that you get doesn't make you a financial expert. Those licenses you get just give you a license to sell, right? That's all you're able to do. You're selling mutual funds or insurances, and that's it.
Yeah.
And I did both, and so the problem is, and I know there's people that even in the real estate space or coaching space will debate me on this, because I had one debate me on it recently. He's like, oh, no. Most people make their money in the stock market. I'm like, what? He's like, well, those people that were millionaires that had real estate, the thing is, most of it was just their own home. He's not wrong, right? I mean, when you look at the millionaire stats, you can look them up. There's about 25 million millionaires in the United States. So about 8%. Every one of them owns real estate. That's true. Yes, he's right. Some of them just own a property in California and they're middle class and they just happen to be net worth millionaires because of that. But most of those people still had multiple properties. And it comes back to your question, right? Where do they make the money? Because yes, there are a lot of millionaires and billionaires, I'll say multimillionaires that have money in stocks. Most billionaires just have their own stock, right? Multimillionaires will put their money in other people's companies and stocks. But is that the cause or the effect? Right. And I believe what you believe in that way, which is if you're looking for somebody who's starting from zero and they're trying to get to wealthy, to millionaire plus status, real estate's the best way to do it. You could be accidental with real estate and still make it, right? Yeah. There's plenty of people we've seen that just buy their neighbor's house or whatever, and then they somehow become net worth millionaires.
Yeah.
You can accidentally do it in real estate. You cannot accidentally do it in the stock market. No. I mean, okay, you could, but it's not likely. It's really not likely. You are more gambling. So when people say like, oh, well, stock market's the way to do it. No, like that's people after they made the money. Either it's in business or real estate. Those are the two best places I've seen it. If you can have both, awesome for you, because you're more likely to become a millionaire than anybody in this country right now.
I look at stocks as legalized gambling.
Yeah.
Right. Like,
it really is.
You get to, and you feel like it's like the blackjack table, like because I was involved in this decision, right? I saw this was going to go up, so I bought it, right? We disregard all those that went down.
Yeah.
I knew this one was going to go up. You feel good about it. And there's the whole thing, right? Like Tony Robbins' book, Money Mastered the Game. Like, man, how disillusioned I was about the stock market after reading that book.
Yeah.
Like every mutual fund, not every mutual fund, maybe 90+% of mutual funds, right? They're just scams. Like,
yeah, they don't even make market returns.
They don't like they'll say is making this return, but they don't calculate like all their fees and commissions all out of it. So yeah, like the value of this stock has gone up, but disregard like the 1.5% management fee that we took out every year, and 1.5% compounded over 30, 40 years, pretty significant.
That's half your money right there.
Yeah.
Yeah. With that compounding interest rule of 72 worked now against you, right?
Right.
In fact, Fidelity actually came out with their numbers. Millennials, right? 84% of millennials will pick what's called the target date retirement funds in their 401k. 84%.
84%.
Yeah. And I'm pretty sure I didn't make that up on the spot. 78% of the time I do make up statistical. No, just kidding. I think it's 84. Is it 84, 86? I'm going on the low end. I think pretty sure it's 84%. Fidelity, millennials will pick their target date retirement funds. So if they predict that their retirement date is going to be 2055, well, cool. Fidelity has this nice, easy button you click that says retirement target date fund 2055. Yeah. Right. Well, that's what most millennials are picking. I went and looked at the numbers. I said, let's look at the last 10 years compared to the S&P 500, which isn't that great either. Let's compare that to what Fidelity's funds have done. Well, the S&P 500 in the last 10 years from 2013 to 2023 did a 10.1% return. The Fidelity target date funds, all those retirement funds, did 8%. So they were 2.1% less than the stock market. The average stock market, just so you know, the S&P 500 only averages about 7.7% in the last 30 years.
Yeah.
So do the math. Let's just say it's 10% less, right? That means you're not making 7.7. You're making closer to like 5.5. But wait, there's more. Because you just said those fees, there's also a 0.75% fee that comes out of that. So that leaves them with about a 5% return or less.
Yeah.
So you're making less than 5% a year. But all the financial advisors are telling you, oh, put in 10, 12%, compound that over 40 years, and that's how much you'll have. And inflation is only 2%, which is bullcrap. So that's why everybody comes out with wrong numbers. That's why everybody who saves, the sad thing is everybody gets blamed for not saving enough. But the truth is they're saving just fine. They're just saving in the wrong places, and they're given overpromise, underdeliver results, but the financial advisors won't put the blame on themselves.
Right.
They'll put the blame back on you. It's like, well, history says this, and this is what it is. No, it's not. What they actually walk away with is way less than what you claim it is. It's a lie.
If you enjoyed that clip, make sure you hit the subscribe button so you never miss an upload.